Robinhood is finally going public, and they want you to be the first investors. Hey everyone, this is Kevin the Apptrepreneur. Welcome to my channel. Hey, do me a favor before we continue. If this is your first time and you happen to really like this video, do me a favor, hit that subscribe button and ring that bell to be notified of future content. All very interesting stuff coming, and you will help support the channel. We thank you very much. So anyway, we have talked about Robinhood quite a bit on this channel, and I definitely have a love-hate relationship with Robinhood. I love the app, love the concept, love what Robinhood has done for investing. Definitely like how Robinhood helps entrepreneurs like me make money and invest in, stocks and crypto and everything like that. Heck, if it weren't for Robinhood, I would not have had my Dogecoin success that I did earlier this year. However, Robinhood also has some bad things about it. Basically, the app crashes a lot, and it's not exactly stable sometimes, and there is some confusion whether or not fee-free stock trading can really be sustainable, especially when they have other services that should be making the money that people are not signing up for, because why sign up for it when it's fee-free? Also, I suspect that in the future, this is personally me thinking, I think at some point the fee-free feature will be more limited to a certain number of transactions per month, and will force more heavy traders to get the premium features, and what's that going to do to their app? So, there's questions like that on the business model. Nevertheless, Robinhood says they are ready to go public. And they are doing something very bold, very different, something that I don't really think I've ever seen a company do before. They are reserving $770 million worth of shares to their Robinhood customers before going public. That means this amount of money will be up to grab for Robinhood users first, not banks like Goldman Sachs or investors like Warren Buffett. So, it's kind of an interesting situation. In fact, I'm kind of having flashbacks of MoviePass, if you will, where when MoviePass said, oh yeah, we're going to start making movies. Or now, we're going to make our own movies. And I remember their first movie was not American Gangsters. It was American something. It was about the kids who tried to steal the artwork, something like that. It's kind of a shame that I can't remember the name because it was actually one of the best films of the year. But anyway, MoviePass made that movie, put it in theaters, and the vast majority of people who bought the tickets were MoviePass customers. And the same thing happened with another film they made called Gotti, which was one of the worst movies I've ever seen, to be perfectly honest. And it was kind of one of those things where it's like, oh yeah, MoviePass, they're buying their own tickets, they're putting their own value into their own company. Like, it's not outside value, it's they're making product, and then they're buying the product. It's almost kind of like, the Scientologists buying up the L. Ron Hubbard books and making them bestsellers all of a sudden, but, don't want to get too much into religion. So anyway, that's kind of what I'm having those flashbacks of, is the, MoviePass. And Robinhood is now like, okay, we've got these shares, they're going to be worth about $40 a share, and guess what? Our own customers are going to buy them. Basically blocking a lot of outside investors from getting a hold of it, which might determine what the company is really worth. So right from the get-go, this is a little strange, but we're gonna, look at this article, and we're gonna discuss the potential pros and cons of investing in Robinhood, and, I've definitely got some thoughts on it. So anyway, popular brokerage app Robinhood is taking the unusual step in the stock market, allowing users of the app to buy up to $770 million worth of its IPO shares before going public. The plan also presents risks should investors sell their shares quickly, and typically stock is offered only to institutional investors and company insiders before going public. And this is also, by the way, why the stock can rise dramatically before it actually goes public, because the institutional investors and company insiders, they get the first pick of the litter, and they say, hey, yep, we like this, we're going to buy at this price. And so what originally was going to be a $90 stock for DoorDash becomes like almost a $200 stock by the time it hits the market and is totally overvalued. So, just explaining that one. Robinhood will begin trading on the NASDAQ Thursday under the Hood ticker symbol. The company's estimate of $770 million worth of shares being offered to customers is based on an offering price of $40 per share. In a filing with the Securities and Exchange Commission last week, the price was decided as a midpoint in the range of $38 to $42 per share, which in my opinion is actually kind of cheap for Robinhood stock, but there's a reason I'm not joining the IPO. With up to a third of its IPO shares available to ordinary investors before going public Thursday, Robinhood is seeing a market valuation of up to $35 billion. Early access can potentially give investors a big advantage if shares move higher once they debut. Between 2001 and 2020, the average U.S. IPO returned 14.5% from the offer price on day one, according to Renaissance Capital. So far this year, the jump is even greater at 34%. For IPOs that have raised at least $100 million, the average first day return this year is 25%. Pretty good. But expanding early access beyond Wall Street insiders isn't without risk, especially given that Robinhood is making available such a large chunk of its offering to users via its own trading platform. The move could backfire if many individual investors, often referred to as retail traders, flip their shares for a quick profit rather than hold them. So basically what that means, and you probably do this because you might be a Robinhood user yourself, that's when you buy shares and you're not buying them for the long 5, 10-year, 20-year investment. No. You're buying it for the third day, fourth day, fifth day investment. You're buying a bunch of shares at $20 and then hoping by Friday they're $25 you can flip them and get some beer money. That is the vast majority of people trading on Robinhood. And these are the people that Robinhood will be making a good chunk of their IPO shares available to. And if these people buy the shares and let's say it goes up to $60 that day, and it has a very good chance of spiking that day, I'm not going to lie, there's also a very good chance of those same people basically taking the money and run, and then the stock could be much lower than what they had anticipated it to be. So that's something to consider. The major downside and the reason this is so unusual is issuers typically place a great deal of value on the investment bank's ability to place the shares with institutional, long-only investors who understand the business, believe in it, and have done their homework, Kennedy said. Retail traders have more of a reputation of flipping, so this could result in higher validity. While giving individual investors a shot at pre-IPO shares is unusual, there have been some high-profile examples in recent years. Ride-hailing apps Uber and Lyft gave their drivers a way to buy IPO shares. Yeah, they gave them a way to buy IPO shares. They didn't give them IPO shares. They gave them cash based on how many rides, and they kind of suggested that maybe they should buy those shares. By the way, people who bought those initial Uber shares took a huge bath. If they did not sell them right away and they sold them now, they probably would have made a pretty penny. I don't know. I think Lyft users are still. Let me check this out. Let's see what's Lyft doing today. Lyft is still at $52.91. If you bought on day one, you got close one day, but you never ever recovered from that one. So yeah, that was like a pretty scuzzy way of Uber and Lyft to once again take from their drivers. While marketplace Etsy let its users get a piece of its IPO. Some companies also elect to go public via what is known as a direct listing. That's where a company sells its shares to the public without involving underwriters, so essentially everyone is on equal footing. Robinhood's approach stands out mainly because it is setting aside up to 35% of the IPO shares for its users. That's the largest portion by far of any pre-IPO shares to be designated for retail investors in an underwritten offering, Kennedy says. Robinhood recently rolled out IPO Access, which I successfully enrolled in and got IPO shares of You, which has done very well for me, and I am very happy with that stock, and I'm going to keep that stock. A platform that allows users to get in early on IPOs. The first such IPO made accessible to Robinhood users was Fig stock market debut in May. Shares in the online scrub seller soared 36% on their first day of trading. Robinhood users interested in buying shares of the company via its platform must sign up for the IPO Access feature. Once there, they place a conditional offer to buy, or COB, and say how many shares they hope to purchase. So for those of you who are not aware of how this is going to work, you commit to a certain number of shares, and you have to have money in that account. You say, I'm going to buy these shares if they go up between this price or this price. You select a price range on what you will buy the shares at. And if it premieres at that price, then it will deduct from whatever is in your Robinhood account. And if you have nothing in your Robinhood account, then I assume you don't get anything, and you probably get put on like a timeout feature by the Robinhood app because you didn't have the money to, fulfill that purchase. So Robinhood has warned that users of IPO access may get the full number of shares they want, or a partial amount, or none at all, depending on demand and other factors. Robinhood is discouraging users from flipping shares by buying through its IPO platform, and this is key. This is something you must keep in mind if you want to buy Robinhood shares or any IPO shares through Robinhood. And I believe they put this in because they knew they were going to be doing this for the Robinhood app. But the company warns that users who sell their IPO shares within 30 days of the IPO will be restricted from buying shares in IPOs for 60 days. I actually made a video about this and talked about this in greater detail. I'll link to it above. But anyway, that may explain the too prolonged approach Robinhood user Alan Tran of New York is taking. The 23-year-old who began using Robinhood in 2016 and hosts online communities of investors says he has signed up for Robinhood's IPO platform, intends to buy shares in the company and hold them, quote, for a very long time. Tran also plans to use another trading platform to buy shares in Robinhood once they make their debut, and then scalp or sell those right away to profit on what he expects will be a big first day pop in the market. He says, I'm going to watch the stock rally with hype, then I'm going to get out relatively quickly, banking my profits. And if the stock should open at below its offering price, I would be very, very surprised that happened, he said. If that does happen, that just means I'll be able to buy more shares with the same amount of capital. So I'm actually kind of in that boat, although I'm not going to be buying shares on other apps or anything like that, like Public or Webull. By the way, if you don't have any of these apps, including Robinhood, and you want to get in on this, use my referral links below. You will get free stocks in something. It could be Microsoft, Disney, or it could be something smaller. But the point is, whether you get your one free trading stock on Robinhood, your up to $1,200 free stocks in Webull, or your Public stock, which they will give you a stock valued somewhere between $5 to $100. Use the referral links and make sure you get that bonus. But I intend to buy stock in Robinhood. I'm not saying you should, by the way. I am just saying that I am going to be buying stock in Robinhood. Now, am I going to be doing an IPO? Probably not, because I do agree with Tran here. Alan Tran. I believe that there will be a big pop on day one. It's going to go up like crazy in one day, but it's also going to dip quite a bit, and it will probably continue to dip for a little while after that because, new business model and everything. But when the stocks are priced right for me, and who knows what that's going to look like, if it's $30 or $25, I would be very, very comfortable in buying 20 or 30 shares at that point. And I do intend to hold that Robinhood stock for several years because I do believe Robinhood, despite the issues it has now, does have long-term potential. Again, I'm not actually telling you should do that. You should always look into the company. You should look at the pros and cons of the company. Make your own decision. Talk to financial experts. I am not one, despite the money that I make. I am not a financial expert. I didn't even finish college. But that's what I plan to do, and Robinhood is planning to, and I think it's very interesting that Robinhood is doing that. It's one way to grab headlines, and certainly it results in videos like this, which means I am just advertising the IPO stock, and, well, that's probably what they want. But anyway, I would like to know, what do you think about this? Are you going to be buying Robinhood stock? Are you not going to be buying Robinhood stock? I would love to know. Comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one.